Hello everyone. In this presentation, I will be discussing the intermediate targets of monetary policy. We will see what are the reasons for the central bank to adopt intermediate targets of monetary policy, and we will also see the properties that the variable should have to serve as an intermediate target of monetary policy. So here our focus will be to study the money stock target and interest rate target as an intermediate target of monetary policy, and we will also see the cases for and against it. Let us see some questions before starting the presentation. What are the intermediate targets of monetary policy? What properties should the variables have to serve as an intermediate target of monetary policy? And differentiate between the money supply target and interest rate target as an intermediate target of monetary policy, and which is better. Now let us first start with the goals or the targets of monetary policy. We will study these targets of monetary policy under two heads: the final targets of monetary policy and the intermediate targets of monetary policy. This intermediate target of monetary policy is the focus of our present study. What is this intermediate target? Intermediate targets are basically the short-term targets of monetary policy that helps to achieve the final targets. We can also say that it is the path for the achievement of the final target, and intermediate target helps the monetary policy makers to meet the final targets. Now, what are these final targets? The final targets of monetary policies are growth, full employment, price stability, and balance of payment equilibrium, whereas the intermediate targets are money stock target and interest rate target. So in the present study, we will see the money stock target and interest rate target in detail and how this target helps the monetary policy maker to achieve the final target. So let's see the properties that central bank must look into in selecting the variables to serve as an intermediate target of monetary policy. Number one, intermediate target must be consistent with the central bank final goal or target of monetary policy. Number two, it must be accurately measured on timely basis. This will help central bank with a quick and accurate information about which monetary policy actions are needed to achieve the intermediate target. And number three is intermediate target must be controllable so that central bank can actually hope to achieve it, or at least move in the direction of achieving it. So that means the three important points which you have to remember is that intermediate target must be consistent with final target or goals of monetary policy. It must be accurately measured on timely basis, and it must be controllable by the central bank. Now coming back to our basic question, what should be the choice of the intermediate target of monetary policy by the central bank? So the central bank has been facing several intermediate targets and faces proposals for several other. But the traditional intermediate target of central bank's monetary policy are money supply target, which includes monetary base M1, M2, M3, and M4, and the interest rate target, which includes short-term rates such as treasury bill rates. However, in recent days, there have been proposals to use prices or nominal GDP as an intermediate target. So now let us find out the money supply as an intermediate target and interest rate as an intermediate target, and case for and against the money supply and the interest rate, and which is better. Now the important question that comes here is, what are the reasons which are responsible for the central bank to adopt the intermediate targets of monetary policy. Intermediate targets help the central bank to attain the final targets of monetary policy. No doubt, final targets are the true goals of monetary policy, but the only reason for aiming at intermediate target is to assure and facilitate the central bank to achieve the final target. Let us see two major reasons for the central bank to adopt the intermediate targets. Reason number one, central bank adopts an intermediate target to make the discussion of the monetary policy less political and more ideological, because the intermediate target changes the monetary policy debate, that is, debate over difficult and politically sensitive issues like unemployment, GDP growth, inflation, to the debate over the goals for the intermediate target, that are money stock target, या money supply target, or the interest rate target, as these targets are considered as less politically sensitive. So, shifting from the final target of monetary policy to intermediate target of monetary policy makes the monetary policy less political and less sensitive. Another reason for the central bank to adopt the intermediate target of monetary policy is intermediate target provide timely information on the state of the economy. The timely information on the state of the economy helps the monetary policy maker to take the monetary policy decisions. As we all know that final targets like unemployment, inflation, which is measured on consumer price index basis, real GDP, these informations are observed on monthly basis. For unemployment, for inflation, it is observed on monthly basis, and for real GDP, it is observed on quarterly basis. But if we see the intermediate targets, these informations, the information with respect to money supply or with respect to interest rate, are observed for a very short period of time. Like information on money supply target is observed every week. Information on interest rate can be observed even for a second or a day or overnight. So this helps the monetary policy maker to take a policy decisions and are very useful information for the central bank deciding the success and the failure of monetary policy, as these short-term targets help the policymaker to attain the final goals of monetary policy. It is because of this reason the monetary policy maker have shifted from the final targets of monetary policy to the intermediate targets of monetary policy. So now it is clear that when we talk about the final targets of monetary policy, which involves the GDP target, the inflation target, and the unemployment target, these targets no doubt are very politically sensitive. Either you talk about the unemployment in the economy or the inflation or the GDP, these are very politically sensitive data and it involves the political debate in the country. Along with that, the collection of these data on GDP, inflation, and unemployment involves time lag, because for GDP, the data is released on quarterly basis and Ministry of Statistics and Program Implementation releases India's GDP on quarterly basis. If we talk about the inflation target, this data is released on monthly basis. That is, the Ministry of Statistics and Program Implementation releases All India Consumer Price Index on monthly basis. And if we talk about the unemployment, the data on unemployment are released on monthly basis and it is released by Center for Monitoring Indian Economy. I have presented this data. You can see that from January 2022 to November 2022, the unemployment rate in India is published by this body on a monthly basis. So whenever monetary authority needs to take decision, it has to wait for the data or 30 or 31 days for inflation unemployment, that is at least for a month, or if decision on GDP, the authority needs to wait for quarterly basis. So that involves a lag in the collection of data, and this reduces the effectiveness of monetary policy in taking the decisions. Therefore, in order to avoid the time lag and to make monetary policy more efficient and effective, the monetary authorities have shifted from final target to intermediate targets of monetary policy, which are money supply and interest rate. The data on money supply and interest rate are available on weekly or fortnightly basis, which help the authorities to get the data in a very small span of time and help to decide the policy for a smooth flow of the economy to attain the final targets. Now let us try to understand the money stock target with the help of the figure and cases for and against the money stock target. So if we talk about the money supply as an intermediate target, we all know that Central Bank of India, that is Reserve Bank of India, measures and publishes the money supply on weekly and fortnightly basis in India. It measures the monetary aggregates, which is the total amount of money in circulation in India at any given time. This monetary aggregates includes M0, M1, M2, M3 and M4. M0 is called the base money or the central bank's money. It is the obligation of the central bank, which includes currency and central bank depository accounts, whereas M1 and M3 are the commercial bank's money, which is the obligation of the commercial bank that includes current account and saving account of the commercial banks. M1 is also called as the narrow money and M3 is also called as a broad money, whereas M2 and M4 component also include post office deposits as well. Now let us see the money stock target as an intermediate target of monetary policy with the help of this figure. This vertical line is the interest rate in percentage and the horizontal line is nominal money stock. So starting with, we have demand for money curve and the supply of money curve, which gives the equilibrium at point A. At point A, we have a target level of money supply, that is MT, at the interest rate of I star. So this is the initial level of interest rate at a targeted level of money stock. Now suppose there is increase in the price level in the economy. As a result, the demand for money curve shift towards the right from MD to MD1. As the demand for money increases with a given supply, a new equilibrium shift from point A to a new point, that is point B. But at point B, we can see that there is increase in the money stock. The higher equilibrium money stock, which is more than the targeted level of money stock. So in order to reach to again the targeted level of money stock, RBI intervene and take a policy measure. RBI reduce the money supply from MS to MS1 and a new equilibrium is established at point C. So at point C, RBI policy decision helps to again achieve the targeted money stock, but the rate of interest increases from initial I to I1. In the same way, if there is decrease in the price level in the economy, the demand for money shift towards the left. The demand for money curve moves from MD to MD2. A given money supply, a new equilibrium is set up at point D. But at point D, the equilibrium money stock reduces and it is less than the targeted money stock, that is MT. So again, in order to achieve the target level of money stock, RBI take a policy decision and intervene by increasing the money supply. So money supply increases, it moves from MS to MS2. As a result, a new equilibrium is established at point E. So at point E again, the money stock target is achieved, but there is a decrease in the rate of interest. So we can see here that intermediate money stock target can be achieved, but only at the cost of interest rate. That means the money target can be achieved only if the central bank gives up the control of nominal interest rate. This shows that when the central bank chooses an intermediate money target, it leads to greater variability in the interest rate, a high volatility in the interest rate. Because whenever there is a increase in the money stock, RBI will take a contractionary measure and that will increase the interest rate. If there is decrease in the money stock than the target level, RBI take the expansionary monetary policy by increasing the money supply that will reduce the interest rate. So from this, it is clear that central bank can only control the money supply. It is very difficult for the monetary authority or central bank to manage both the money stock target and interest rate target simultaneously. Now let us find out the cases for and against the intermediate money stock target. So let us first see the cases for the intermediate money stock target. So the first point in favor of intermediate money target is it allows the interest rate to rise in response to the shift in the investment demand or consumption demand. Therefore, the more volatile the component of aggregate demand, the stronger the case for intermediate money target. The second point in favor of intermediate money target is it is less likely to take the aspect of final targets like inflation, unemployment, growth, which are very sensitive. They always attract the interest of the voters in the country and can create agitation if there is high unemployment or low growth or high inflation. So because of this reason, as intermediate target is more of technical kind, which is not so much concerned for the voters, as voters are not very concerned about the size of the aggregate money stock, so there is less chance of dissatisfaction among the voters of the country. And the next point in favor of intermediate money target is that it is believed that central bank would be able to achieve intermediate money target not only in the short run but even in the long run as well. Let us see the cases against the intermediate money stock target. The first case against intermediate money stock target is it leads to high interest rate variability. In order to maintain the money stock, RBI make adjustment in the supply of money and that leads to high variation in the interest rate. This variation in the interest rate leads to variation in investment demand and consumption demand, leading to uncertainty in the decision making. This unstable interest rate reduces the confidence of the investor and is not very encouraging for the growing economy like India. Another point against the intermediate money stock target is the concern over the choice of the monetary aggregates. As we know that RBI has defined monetary aggregates as M0, that is monetary base, M1, M2, M3 and M4. But there is concern over the choice among the various monetary aggregates because these definitions also changes over time and economists differ over which is the best. Considerable debate is there over which should be chosen as the aggregate to the target, and various measures often do not indicate that the policy moving in the same direction. Now let us understand the intermediate interest rate target with the help of figure and cases for and against it. Another intermediate target of monetary policy is the interest rate target. Now the question is why it is so important? It is important because the interest rate target provides the information about the interest rate for a very short period of time. These data on interest rate are released by central bank or RBI in India for a short-term basis, and it is considered as a benchmark for short-term interest rate as interbank rate. So that means that what is the rate at which the banks are borrowing from one another. It totally depends upon the demand and the supply of loan and how the rate of interest are decided in the market. So this is very sensitive rate, totally governed by demand and supply, and it is also called as the Mumbai Interbank Offer Rate or Interbank Call Money Rate. So it is the rate of interest that bank charges when they borrow fund from each other. The loan in the call money market are very short, usually lasting no longer than a week and are often used to help banks to meet the reserve requirement. So this clearly shows that interest rate target plays a very important role as an intermediate target of monetary policy because it provides the information about the interest rate on a short-term basis to the policymakers. This short-term interest rate is the benchmark rate. It is the interbank call money rate, that is short-term lending rate in the money market, which allow for large financial institutions such as banks, mutual funds, corporations to borrow and lend at interbank rate. So this rate is very for a very short period. It's a benchmark rate and a very fluctuating rate because the interbank exchange rate can fluctuate at any time based on number of factors like supply and demand for the currency, interest and inflation rates in the country, trade deficit, government debt, political and economic stability. All these factors play a very dominant role in fluctuation of the interbank call money rate, which provides the short-term rate and gives the information to the monetary authority about the interest rate as an intermediate target. So if you see the data on Indian economy, so this is the India's interbank rate historical data from 2021 to 2022 November. You can see how the rates are fluctuating. This is fluctuating because of the change in these following conditions, and see in this month in July 2021 this rate changed once, twice, thrice and four times in a month. So this rate is a very short term rate which are very helpful for the monetary authority to fix the intermediate target. Let us try to understand the interest rate target as an intermediate target of monetary policy with the help of this figure. In this figure, we will try to understand and find out how central bank decides to manipulate the money supply to meet its interest rate target. So the interest rate is on vertical axis and money supply is on horizontal axis. Let us start with the demand for money and the supply of money curve. So at this demand for money and supply of money in the economy, the equilibrium is at point A, which gives the rate of interest, which is taken as the targeted rate of interest IT, and the money stock is M0. So if the demand for money is as expected at MD, the equilibrium is at point A, the intermediate interest rate target will achieve at IT and money stock at M0. Now, suppose if the demand for money increases from MD to MD1, as a result, the demand for money curve will shift towards the right and new equilibrium will be at point B. But at point B, the central bank missed the interest rate target. Interest rate increases more than the target at point B. Now, in order to achieve the interest rate target again, monetary policy comes in and it increases the money supply from MS to MS1. The money supply curve will shift towards the right. As a result, the new equilibrium will be at point C. So as soon as the economy again moves to point C, interest rate target is achieved, but at the cost of money stock target because the money stock increases in the economy. So the intermediate interest rate target is maintained at the cost of increase in the money stock target from M0 to M1. Now take the another situation. If the demand for money decreases from MD, the initial demand, to MD2. As a result of the fall in the demand for money, the new equilibrium shift from point A to point B. At point B, we can see that central bank again missed the targeted interest rate. The interest rate has fallen down. So in order to again move to the target interest rate, central bank will come in and it will take a policy decision to reduce the money supply. As a result, the money supply curve will shift from MS to MS2 and the equilibrium interest rate will be again attained at a new equilibrium of E. But at the new equilibrium, we can see that money stock supply has fallen. So here we can see that the interest rate target is achieved, but at the cost of the money stock. The interest rate target results in the fluctuation in the money stock. So now it is clear that to attain the interest rate target, central bank has to compromise with the money stock target. As we have seen that in the beginning, the interest rate was at IT at equilibrium point A and money supply was M0, but with the increase in the demand for money, the interest rate moved high because the new equilibrium shifted from point A to point B. At point B, interest rate was more than the targeted level. So central bank intervene and it increases the money supply. New equilibrium comes at point C. At point C, interest rate target was achieved, but that it was achieved at the cost of money supply. The money supply increased in the economy from M0 to M1. Now suppose if the demand for money falls, the new equilibrium shift from A to D. But at point D, again the same problem, central bank missed the interest rate target. Interest rate is less than the targeted level. So in this situation, central bank again intervened and it reduced the money supply. A new equilibrium comes at point E where the interest rate target is achieved, but there is a fall in the money stock in the economy. So this clearly shows that the intermediate interest rate target can be achieved only at a cost of losing the short-run control of money stock. Of course, in the long run, the intermediate interest rate target can be adjusted so that the expected level of money stock is again at M0, but that also depends upon the situation of the economy, if that is still a desirable level or not. So to conclude, we can say that till the intermediate interest rate target is adjusted, money stock control is lost. Now let us see the critical aspect of interest rate target. Here we will see the cases for and against the interest rate target. So we will first start with the cases for the intermediate interest rate target. We all know that when the money supply is given, any change in the money demand leads to the change in the interest rate. A change in money demand leads to change in interest rate. This in turn affects or shifts the aggregate demand. How? Because any change in the interest rate affects the consumption demand and the investment demand. If the interest rate will increase, investment demand will fall because the cost of borrowing money will increase. And consumption demand will also fall because the interest rate is very high. Thus, the consumption demand and investment demand affects the aggregate demand because they are two important components of aggregate demand. So any change in the interest rate lead to the change in consumption and investment. This in turn lead to the change in the aggregate demand, and change in the aggregate demand in turns affect the price level and the GDP in the economy. Now suppose in the short run, if the interest rate falls, investment demand increases, aggregate demand increases, and in the short run, aggregate supply can also be increased. This is going to increase the real GDP or output in the economy. But in the long run, when the aggregate supply is constant, we can't increase the output or real GDP. That will lead to the increase in the price level. So this shows this is a chain from change in the money demand to the effect on the output and the price level in the economy through interest rate and aggregate demand. So this clearly shows that if the central bank keeps the interest rate constant, this will reduce the variation on consumption and investment demand, and in turn will reduce the variation on aggregate demand. So the stable interest rate target fixed by the central bank reduces the impact of change in the money demand on the real GDP and the price level of the economy, and help to promote smooth and steady growth in the economy. From the discussion, it is clear that the intermediate interest rate target can eliminate the problem of variation or instability in the money demand. That in turn affects the price level and the real GDP. Any increase or decrease in the money demand affect the interest rate and in turn affect aggregate demand and price level and GDP. Therefore, central bank counters the shift in the money demand with the shift in the money supply to keep the interest rate at its intermediate target value, that is IT. Thus, with the stable interest rate, the economy is insulated from the variation in the money demand. So we can conclude that the more volatile the money demand is, the greater the case for intermediate interest rate target. Let us see the case against the intermediate interest rate target. In the theory, we have seen that interest rate affects the consumption demand and investment demand, which in turn affects the aggregate demand. Consumption demand and investment demand are large component of aggregate demand. So any change in the interest rate affects the aggregate demand in the economy, which in turn affect the price level and output of the economy. But the critic states that the change in the consumption and investment demand are not only because of the change in the interest rate, but there are many other factors other than interest rate that leads to change in consumption and investment demand, like change in fiscal policy, that is tax and public expenditure, change in the price level, change in expectations, and change in the distribution of income. Therefore, the critic states that intermediate interest rate theory has exaggerated or overemphasized the effect of interest rate on aggregate demand. Coming to the next criticism, the second argument against the intermediate interest rate target is more a political one, as many voters favor low interest rate. Any move by the central bank to increase the interest rate target is likely to incur strong agitation or anger from the voters, which is not politically acceptable and favorable for the ruling party. Thus, intermediate interest rate target tend to take on a life of its own, becoming a final target instead of an intermediate target. Another point against the intermediate interest rate target is intermediate interest rate target cannot be maintained indefinitely, or we can also say that it cannot be maintained for a long period of time. Why? It is proved with the help of Fisher's equation. Fisher equation states that the nominal interest rate is equal to the real interest rate plus expected inflation rate. Here, the capital R is the nominal interest rate, which is equal to the real interest rate plus expected rate of inflation. So now this small r is very important in the Fisher's equation. Small r is the real interest rate, which is the rate of interest upon the price level in the economy, whereas capital R is the nominal rate of interest and R and pi is the rate of inflation. So if the inflation increases, price level in the economy is increasing, this is going to reduce the value of real interest rate, and that in turn affect the nominal interest rate. So if there is a continuous increase in price level, how can we rely on the intermediate interest rate target for indefinite period of time? So in the long run, the real interest rate is determined by the real factors. It is not only determined by the monetary factors, it is also determined by the real factors in the economy, which are not in the control of monetary authority, that is central bank. So because the nominal interest rate is equal to the real interest rate plus expected inflation rate, any successful long-run intermediate target must imply a stable expected inflation rate at the rate implied by the interest rate target and the real interest rate. So let us see some previous year's questions on this topic. The first question is differentiate between money supply and the interest rate as an intermediate target of monetary policy. What properties should variable have to serve as an intermediate target of monetary policy? Next is there is a conflict between interest rate and money supply as an intermediate target of achieving the objectives of monetary policy. Which of the two do you think is better and why? Discuss the efficiency of the following instrument as an intermediate target to achieve the objective of monetary policy, interest rate and money supply. Write a short note on any two. So this is a 7.5 marker. Interest rate, money stock as an intermediate target. Next is What are the intermediate target of monetary policy? What properties should a variable have to serve as an intermediate target of monetary policy? Coming to the next question, by choosing the intermediate target, the central bank confronts a choice of achieving either the monetary target or the interest rate target. Which is better? Explain. Can the central bank choose monetary aggregate as an intermediate target? Explain the point in favor and against the monetary aggregate as an instrument of intermediate target. So if you see all these questions, they are a long question. They are 8 marker, 7 marker, 9.5 marker, 10 marker. So this is a very important question. Prepare it well. If you have any questions on this presentation, please leave your questions in the comment section and like and subscribe my channel to get further notifications. Thank you so much.